What is a day of a life in a treasuries trader like? Well, the first thing is that I get into the office by 6:30. Yes, you heard that right, 6:30. And so if you're not a morning person, you might want to rethink this whole trading idea. The first thing I do is go through emails, look over news from the overnight session, what happened in Tokyo time and London time, because ultimately the treasuries market is a 24-hour-a-day market, and what happens in the overnight session can influence my decisions for the New York trading session. At 7:30 in the morning, we have a group morning call in which different desks go through different positions that I might have on, different flows that they're seeing from various clients, and it's very useful because you don't want to be singularly focused on just your product, because other products that the group trades can ultimately affect the treasuries market. The day really starts in earnest by around 8 a.m. And I'm constantly doing three things: market making, interacting with salespeople and clients, and managing my own positions and risk. The first thing, market making, is probably my primary responsibility as a trader in treasuries. And that means, basically all of our clients have different needs and they need to buy or sell bonds in the open marketplace. Now, as a trader, I am the liquidity provider to our clients in that I will provide a bid price or an ask price depending on what they want to do. The bid price is the price that I'm willing to buy the bond, which is usually lower than the ask price, which is the price I'm willing to sell the bond. And so on a trade of, a smaller trade of, let's say, 10 million notional in bonds or lower, it's actually a pretty easy job. Really, anyone can do it. You just look at a screen, the TradeWeb screen, which is a publicly available price source, and you read off of that screen, either on the bid price or the ask price. It's when you start getting into larger trades where your experience comes into play in terms of judging where you can, exit the risk, how liquidity is, and you certainly make a lot of mistakes as a young trader and learn from them, and hopefully within a few years you're pricing trades of extremely large size. Now, I just mentioned this concept of liquidity. Well, liquidity is basically where I think I can exit my risk at a scratch price, or hopefully maybe even for a small profit. Now, liquidity will change with the marketplace. For instance, on the half day after Thanksgiving, liquidity is extremely poor because a lot of traders are at home taking vacation, a lot of the senior traders are out, and so you have a lot of junior traders that are in charge of the book and are a little bit less willing to provide sharp prices for their customers. Whereas on days like when the non-farm payrolls report is released, liquidity is quite good because there's so many people trading in the market, and there are a lot of people that are buying and selling in the marketplace. Now, in terms of interacting with salespeople and clients, a lot of the times I'll interact with salespeople and they're my main connection to clients. Clients want to know not only what the salespeople are thinking, but also what the traders are thinking, because ultimately traders are the ones that are making the risk decisions. And so sometimes I'll talk with salespeople and have them relay information about my own views and what I think is going on in the marketplace. Or sometimes I'll hop on a client line directly and speak with clients. And I also have a lot of Bloomberg chat rooms open with various clients, and we're constantly talking in those chat rooms as well. And now, the last thing is managing my own positions and risk. This is also extremely important and is basically where most of the profit comes from in my job. And so we'll have existing trades on throughout the course of the week, throughout the course of the month, throughout the course of the year, really. And my job as a trader is to try and forecast as best as possible how my existing positions will react, whether it's to incoming data, whether it's to a new Fed chairperson, whether it's to a new president in terms of the presidential elections, and so you're constantly thinking about the upcoming schedule. And in terms of managing the risk, there are basically three things that you can do to a position. You can either add to the risk, add to the trade if you like it even more. You can modify the trade in some way, whether it means you're basically tinkering a lot around with the pieces, to better express and better optimize your views, or you can reduce the trade or completely exit the trade if you don't like the trade anymore, if you think that the risk reward is not worth having the trade on. And so, over the course between basically 8 a.m. and about 5 p.m., I'm doing those three things: market making, interacting with salespeople and clients, and managing my own risk and positions. At 3 p.m., I mark my book, which basically is taking a snap of the marketplace and marking all my bonds. I'm then going through all of my, basically all of my books and calculating profit and loss for each one of those to report an aggregated number at the end of the day for my daily profit or loss. And then, finally, I'm just filtering through some emails, game planning for the next day, thinking once again about my positions and risk, and usually, probably head home around 6 or 6:30.